The Merlin Group, a Bitcoin company.
Hello, we are the Merlin Group. Today I will take you on a journey through human history of money and the economics that shape it and shape global finance. And then I will take you on a tour through Bitcoin and how Bitcoin serves to shape and change humanity. Now, what is money? These are some of the main characteristics of money: durability, divisibility, portable, accountable, uniform, accepted, and scarce. As of July 2022, Bitcoin is a unit of account. It is portable in its nature. It is divisible, meaning it can be broken down in the means of Satoshi. It is scarce, which we will show later. It is not uniform yet, and it is slowly becoming accepted. Money before gold. In 3000 BC, the Mesopotamian shekel was the first currency in history, followed by coins such as lead, copper, silver, and of course gold, all throughout history. This was from 1250 BC to 1450 AD. Fast forward to March 14th, 1900. Here, the United States had already been established and we were reaching the roaring 20s. Congress passed the Gold Standard Act. In World War I, governments chose inflationary finance and debt-based financing instead of gold-backed currency. Fast forward to post-World War II with the Bretton Woods Conference being established, making international debt settlements being handled in the US dollar. Fast forward only a year, and President Nixon removed the gold standard completely. As you can see in this chart, $100 dropped to being only worth roughly $19 in 2006, and with the current state of inflation right now, it probably is less than that. Financial collapses since the fall of the gold standard in 1971 over the last 50 years have affected almost every single continent, all with the same characteristics. Let us begin. First, Mexico. As you can see in this pattern, Mexican debt rose to U.S. banks, growing over a decade from $29 billion to $327 billion. Then IMF intervention took place and a devaluation of the peso. Fast forward roughly 5-6 years and the same situation. Thailand was the first of many nations, including Indonesia, Philippines, Malaysia, and South Korea. All had IMF bailouts, resulting in GDP skyrocketing, account deficits, and devaluation of their currencies. Financial crisis of Africa. Same situation, but a little different. Instead of the situations prior, this was, in 2001, it was a similar situation where 18 African nations had to qualify for debt relief. Fast forward to the American recession in 2008, and it was a little different because when the recession happened, there was a lower demand in African goods that essentially tanked their export economy, causing $500 billion lost. The difference, however, as you can see in this as you can see here, versus Africa, Asia, and some of the other situations that we'll see in the next slides, there was a $250 billion injection into the global economy to avoid a Great Depression, thus making the U.S. economy not only functioning, but also creating a bigger safety net. Here is the recession by the numbers. Housing prices fell 31.8%, $30 billion in federal guarantees, $180 billion bailouts. Treasury Department spent $439.6 billion. $144 billion was moved from money markets to treasury bonds. And what you care about, unemployment was above 9% in 2010. The birth of Bitcoin. January 3rd, 2009 marks a day that will forever be looked at as the birth of Bitcoin. To keep it simply, Bitcoin is a purely peer-to-peer electronic cash system that does not require a financial institution or central entity. the fall of Venezuela. As you can see here, in 1985, their inflation rate was about 11.38%, growing to a rocket number of 65,374%, and then stabilizing, which really isn't stable, at about 2,355%. One thing to note here is that a trend is similar to the United States, and we will see their story in a second. But before I get to the story, look at that 11.38% number. The United States inflation rate is roughly between 9 and 12%. So as this socialistic rise, government printing, inflation gets worse and worse and worse, Venezuela could be a test of time, and it could be a lesson for the American government or for the next government that decides not to take this inflation path. Before we get to the fall of Venezuela, I just want to touch quickly on the European debt crisis. This crisis was due to the euro being in circulation being created in 1999, circulating in 2002, and because all of these nations had the same currency, they were all now connected to each other, causing a domino effect, thus leading to Greece, Portugal, Ireland, Italy, and Spain all teetering on financial collapse, making some of these other nations that might have had less debt or better economic policy have to bail them out. The Arab Spring. One thing that we have not touched on is one element that comes with a centralized authority, and that is corruption. The Arab Spring was a situation in the Middle East, in Tunisia, Egypt, Libya, and Yemen, in which people were calling for the end of corrupt regimes. Thus, the same solution happened with a IMF $37 billion loan to stabilize economies. Now, Venezuela. The country became too oil dependent. Oil prices fell, they couldn't cut back, they had hyperinflation. I will touch on hyperinflation in the next slide. President Nicolas Maduro, or in a couple slides, President Nicolas Maduro took power, rigged the exchange rate, and caused high inflation rates that were higher than the whole world in 2017, and to this day still a ridiculously high number of over 2,000%. GDP fell 35% and CPI skyrocketed, thus leading to high murder rates and the country becoming a police state. One thing to touch on with the United States is since 1971, there has been a rise in crime because with the fall of the gold standard leading to a debt-based system, it also leads to social problems. The Argentine crisis. 2018, Argentina again received an IMF loan. It led to hyperinflation. The peso lost 50% of its value. It recently just lost 8%. It led to $50 billion bailout and skyrocketing interest rates, bank runs, and imports. 2020. This marked the beginning of the pandemic. Thus, the pandemic did start in 2019, but it was more of an economic pandemic, where JCPenney, J.Crew, Neiman Marcus, Hertz, CBL and Associates, Frontier, Superior Energy Services, Quorum Healthfield all filed for bankruptcy. Small business revenue fell 20%, and jobs spiked to 4.5 million people looking for a job. Hyperinflation. This refers to rapid and unrestrained price increases in an economy, typically at rates exceeding 50% each month over time. According to the Federal Reserve, the currency in circulation rose by $5.1 billion notes, or $226.3 billion, a almost 3x of $75.8 billion in that same year. 22% of the circulating USD was printed in 2020, and there was a national debt of $2.4 trillion that is only getting worse because of these massive spending bills that Congress passed. Bitcoin's growth. By the way, this is with constant bans, and as Bitcoin is growing slowly, if you look at the chart holistically, you're seeing that there's growth over time. Although the Bitcoin price currently is roughly about $23,000, when you look at where it started almost 10 years ago at 1328, it makes that 23,000 look like a more respectable number. Global crypto adoption. This is adoption of crypto as a whole. But if you look at Bitcoin, Nigeria is a nation on here that really stands out. Elements of Bitcoin. These are decentralized, it is open to everyone, borderless, censorship resistant, there's no third party, it's neutral, there's no single point of failure, and it's immutable. Some other characteristics is that it is fast in comparison to traditional financial markets. It is secure, and it is deflationary. One other element is that it has a tiered structure enabling projects to be built on top of it. It is decentralized, meaning that multiple people handle Bitcoin, making it harder to have control by a central entity. It's open to everyone, meaning that whether you are underprivileged or a person of color or have poor credit, it doesn't matter. Bitcoin is for financial freedom and equality. It's borderless, meaning that I can send Bitcoin to someone in Nigeria or someone in Australia. And it's censorship resistance, which is personally my favorite element of Bitcoin. And it means that I can speak truth or I can create projects without fear of repercussion from central authorities. Well, comparatively to financial systems. And as Bitcoin starts to scale, it will become more and more censorship resistant. Accessibility. There's no third party. It's trustless and it's neutral. Too many times, especially in the United States, there's a lobbyist or some sort of backing that controls a narrative. Bitcoin is 100% neutral. And like I said earlier, it's accessible to anyone. It's immutable. Another one of my favorite characteristics. There's no single point of failure. There is no founder of Bitcoin that serves as its figurehead. It's very hard to dismantle. Some would say the only way to dismantle it would be to shut off the internet completely. It's immutable, meaning that code is law, and they work on a proof of work system, which I'll get to in a minute. Bitcoin diagram. Just to keep it simple, Bitcoin works with public and private keys. These public and private keys are used to verify and sign transactions. UTXO. Again, to keep it simple, I'll just read this bottom part right here. UTXO essentially represents one for the payment and one for the change. Essentially, these UTXOs are inputs and outputs. Proof of work. Bitcoin is decentralized, meaning that no central body controls it. So it needs to have an algorithm to enable validity. This algorithm happens where proof of work authenticates it. The miners on the network essentially work with one computer, one vote, and it works with an SHA-256 hash. Proof of work explained. It works through mining, where mining capacity depends on computational power. This essentially is just a complicated way of saying that miners receive a block award for solving a cryptographic puzzle. As more and more miners get on the network, it becomes harder to do a 51-49% attack because they would need more computational power than all of the miners already on the network and the nodes. Proof of stake. To keep it simple, it is essentially where the people that own the most amount of that cryptocurrency, validate the network. They receive a block award from transaction fees, and the way that they prevent a 51-49% attack is to make sure that the person who's trying to do this 51-49% attack does not hold all the cryptocurrency in the network. Stock to flow ratio. To keep it very simple, I'll just focus on this one right here. High stock to flow ratio is not easy to inflate the value, and it's not an indicator of price. Just to explain that in simple terms, stock to flow ratio is a measure of a value's inflation resistance. This is Bitcoin versus gold. Granted, this is in 2021, but Bitcoin's stock to flow ratio is 25 and gold's is 60. How this works, For gold, it is just scarce, so it makes it hard to inflate. And for Bitcoin, it operates on a halving process in which each 4 years, the block reward is cut in half to disincentivize mining, as well as there is a set supply of 21 million Bitcoin. One other key point here is that the Bitcoin standard is official in El Salvador, as well as Prospera and Madeira, which are 2 islands off the coast of Portugal and Honduras, as well as Central Republic of Africa. Bitcoin is an ultimate reserve currency. It is a solution to the banking crisis. It might be unstable in the short term because of all of its bans and the financial regulation. However, it is stable in the long term. Gold, like I mentioned earlier, is hard to inflate. It's easy to steal and confiscate by a central entity. It is a failed reserve currency because it is a nationalization of currency and is always backed by a central entity. Thus why I say that it's unstable in the short term. It does have long-term stability because it is in so many things as a utility. The Bitcoin Standard. This is a book by Savadin Amos. I highly recommend it just to keep things extremely simple with my explanation of how it ties into the history of money. It kind of goes over gold versus Bitcoin, gold being vulnerable to government intervention, and operating on this Keynesian ideology of consumption, instant gratification, and spending. And it is redeemable, but because the system changed to a debt-based system, the money is now irredeemable. These are some quotes that I took from the Bitcoin Standard. Money soundness is its resistance to control by a sovereign. Money soundness essentially is money that is backed by something. In the case of Bitcoin, it is backed by the Bitcoin blockchain. This is another quote that I like. It is, "The Great Depression was because of fleeing the gold standard, post-World War I, government control, and socialization of the economy." To touch on that quote, I do want to mention this first sentence in this next quote, which is, "Capitalism is what happens when people drop their time preference, defer immediate gratification, and invest in the future." And I do want to go back to this quote very quickly and say that socialization of the economy caused the Great Depression. And here it is the same situation where this idea of mass consumption and central entity backed money based on debt is asphyxiation of the economy, not respiration of the economy. This is a quote by Ralph Merkle, who founded the Merkle Tree. Just to keep it simple, the Merkle Tree is a element of Bitcoin that helps with its infrastructure. This quote is, "Bitcoin is the first example of a new form of life. It lives and breathes on the internet. It lives because it can pay people to keep it alive." This is a very, very important statement because it is a new form of life. You see, banked money is, in a sense, digital money because of fractional reserve banking. However, it does not live and breathe on the internet and publicly. Bitcoin does, however. And it lives because it can keep people, it can pay people to keep it alive. I'm sorry, I got a little tongue twisted on that one. But basically, to explain that, it pays people to keep it alive because Bitcoin is public. So the more people on the network give it more nodes, or a node is, just to keep it simple, any wallet that is on the network. And the more wallets on the network strengthen the network and thus make Bitcoin stronger, as well as give people peace, freedom, and hope. I won't read this quote, but I do want to touch on one thing quickly. And I did mention fractional reserve banking. And he says here, more of people's money is being placed in government-supervised banks. So that's just something to note, is that with these government-supervised banks, they're doing fractional reserve banking, thus making your dollar less and less and less valuable. Here kind of plays on that same narrative that governments will always find a reason to print more money. And again, it's just to state that capitalism does not have anything to do with unemployment. Unemployment is due to the government making money unsound. Here are some schools of economic thought, just to keep it simple. Monetarism stresses the importance of a money supply and restricted central bank. Keynesian economics values aggregate demand and consumption, and the Bitcoin standard values investments and saving over time instead of instant gratification and high spending. Myths to propel unsound money. Just to touch on these very quickly: war, nationalism, central government management of an economy and of money, stresses the importance of credit, and government programs are what enables a economy to thrive. These are all myths because what they truly lead to is corrupted curriculums. It leads to people losing their jobs, and it leads to banks becoming nearly impossible to fail, and it leads to bank runs like you saw with the Great Depression. It leads to no solvency. I mean, unsound money backed by debt does not benefit the people, to keep it simple. Sound money. Sound money is redeemable backed by gold or another hard asset. What bankers' pivotal functions is they safekeep assets as deposits, and they match maturity and risk tolerance. The reason why Bitcoin works is because the blockchain serves to do both of these pivotal functions without you having to put trust in others. The blockchain will safekeep assets, and the blockchain, well, mainly because of people doing analytics of the Bitcoin blockchain, there is risk tolerance and matching of maturity. Why Bitcoin works? Well, I have touched on all of these, but I will touch on them again. It is verified. It removes the trust completely. It has a proof of work system, and it relies on math instead of trust. How to buy Bitcoin. These are just some ways you can use a Bitcoin ATM. You can use, I prefer this. This is Wallet of Satoshi. This is essentially just a hot wallet, which we'll get to in a minute, where you can send Bitcoin and receive Bitcoin. Bitcoin digital wallets, like I said, I mentioned Wallet of Satoshi. There's Moon Wallet, which is another one of my favorites. Chivo, which is associated with the El Salvadorian government. Bitcoin Wallet, Strike, and Swan. Hardware wallets are, well, before I go into hardware wallets, I just want to say, in the Bitcoin community, there is a statement that is not your keys, not your crypto. What that essentially applies to is that when you have your money with a hot wallet, even a Bitcoin wallet, or on an exchange, you don't have access to your private and public keys. Versus with these hardware wallets, you do have access to public and your private keys. And just to keep it simple for everyone, I prefer Trezor and Ledger Nano, and eventually I will do a video on Trezor, kind of showing how it works. And Trezor is essentially you have a card, and it works like a USB, where when you have that Trezor plugged into your computer, you can check your funds, you can send and receive Bitcoin, etc. But if no one has that plugged in, then they cannot steal your Trezor without that card that has your public and private key information. Some of the advantages of Bitcoin. I won't fully read these out, but I'll just explain these kind of in simple terms. The first one is that Bitcoin is a long-term store of value. One of the biggest elements of Bitcoin is because it's sovereign, has a set supply, and is operating on the blockchain. Over time, it becomes more and more and more secure. Next, I did mention this earlier when I was talking about the proof of work system, but essentially, Bitcoin doesn't put trust in anything, so it always operates that nodes could be hostile. So what it does is it has that proof of work verification layer to essentially check everyone so that, there is no malicious activity. And just to explain an overview of Bitcoin. Bitcoin it's novel. It is digital cash. It's still working on some of its problems. It's still growing, but it is definitely showing growth. You're seeing Bitcoin development. You're seeing Bitcoin mining. It's both are growing at a rapid pace. You're seeing entities like Chain Code Labs that are creating institutions that teach people how to code on the Bitcoin blockchain. You're seeing more and more updates to the Bitcoin protocol, things like Taproot or the Lightning Network. You're seeing more development on the chain, and you're seeing more adoption. Like I mentioned earlier, El Salvador, Central Republic of Africa, Prospera, and Madeira, both 2 islands, so it's unofficial. But all of those have Bitcoin as their legal tender, yet alone so many other nations all around the world that have Bitcoin unofficially as its legal tender. Thank you.